Hey everybody, is it me, or does it feel like every day that goes by, gold becomes more and more essential? The dollar weakens, the UK is struggling, the EU is facing challenges. Meanwhile, a lot of changes happen in Asia, Africa, Latin America and the Middle East. Today, we're talking about BRICS, what's happening and what this means for you, me and gold prices. First of all, what is BRICS? BRICS stands for Brazil, Russia, India, China, and South Africa. It started out as an acronym used by Jim O'Neill to describe the fast-growing emerging economies in 2001. In 2009, Brazil, Russia, India, and China held the first BRICS summit, and in 2010, BRIC became official. South Africa joined in 2011, putting the S in BRICS. The main purpose of BRICS started off as an economic collaboration and providing alternatives to a Western-dominated global economy. However, the union is growing more and more political. A lot of countries have also expressed interest in joining BRICS. In 2022, Iran, Argentina, and Algeria applied to become official members. Other countries like Saudi Arabia, Bangladesh, Egypt, Turkey, Nigeria, even Mexico and Japan are seeking closer ties with the BRICS nations. Essentially, BRICS is becoming more important. In fact, the total GDP of the BRICS countries recently overtook G7. Currently, BRICS contributes 31.5% of global GDP, as compared to the 30% of G7. By 2030, less than 10 years from now, this percentage is expected to increase to 50%. There's a lot of reasons behind this, but one of the biggest ones is manpower. Of course, having more countries join BRICS will also massively boost their GDP, obviously, but the population of BRICS nations is also an important factor. BRICS have a combined population of 3.22 billion people, more than 40% of the world's population in 2021. Productivity is what drives economic growth, and that mainly happens in one of two ways. 1. Increase in population. More people equal more workers and more consumers. That's why a country which is growing in population tends to have a growing economy. BRICS countries have a much faster population growth than G7. Half of the G7 countries are only seeing population growth because of immigration. BRICS is in a much better position here. 2. Improvements in technology. Whenever countries and companies utilize new technologies, productivity shoots up. You see efficiencies that allow a single person to do a lot more. We saw this in the Industrial Revolution, when countries like the UK experienced a massive economic boom. We saw this again with the digitalization and the internet. Countries like India and China have historically lagged behind the UK and the US in terms of technology. Yes, but they have almost caught up and in some cases are actually ahead. I can say a lot more, but the gist of it is that BRICS is a formidable economic power which is only expected to grow. They have their problems, yes, but they're an essential part of the world economy and there is no way around it. Not to mention that they have access to a lot of rare and strategic metals which are essential to our future. Now, what does BRICS have to do with gold? A few things, but the biggest one is this. BRICS have been pushing for a new currency backed by gold. Countries will use this currency instead of the dollar for international trade of gas, oil, and other goods and services. Now, there has been no official agreement on this currency yet. The BRICS members will vote on it at the next BRICS summit in August 2023. Given the news lately and how hard Russia, China, and Brazil are pushing for this currency, I would say this is extremely likely. China and Russia have started settling their trades in rubles and yuan over the last year and a half. Brazil and China have recently agreed to settle trade in yuan and Brazilian reals. Saudi Arabia and China could also start trading oil in yuans, although they have not formalized this yet. Basically, we can see that these countries are ditching the dollar little by little. That's why introducing a new currency is looking very probable. Plus, the People's Bank of China has increased its gold reserves for the 5th consecutive month, so they are stocking gold for some reason. The Chinese central bank has only bought 120 tons of gold over these 5 months, which is about a 6.1% increase in their gold reserves. Of course, that's not really massive, but they are one of the biggest gold buyers right now, and they are consistent. Since the start of 2023, central banks have purchased a net 125 tons of gold. Out of these, Singapore bought 51 tons, Turkey bought 45 tons, and China bought about 40 tons. This was also the 11th consecutive month of net gold purchases by central banks. Again, Turkey and China have been the biggest buyers. Overall, central banks are consistently doing monthly gold purchases, so this is something to keep an eye on. This can become a massive bullish factor for gold prices, especially if BRICS introduce a gold-backed currency. It's worth mentioning that India is also a massive massive gold buyer, although that's driven by the actual people, not the central bank. Indian people buy a lot of gold and gold jewelry. If BRICS trade agreements boost the Indian economy, we can see more and more bullish pressure on gold prices. There is something else too. As you and I know, gold does best when there is uncertainty. The growing power of BRICS will definitely lead to more and more geopolitical uncertainty. BRICS want to challenge the US, they want to challenge the West. There has been a lot of speculation about how the new BRICS currency will cause the dollar to lose global reserve currency status. There is no way to know for certain whether this will happen. We have a lot of smart people arguing both sides. It's hard to tell. However, just the fact that BRICS want to challenge and sideline the dollar is enough to cause concern. I personally think this will make a lot more individual and institutional investors put money into gold. The banking crisis in March led to a lot of cash being put into gold ETFs. I suspect this will continue, but we need to keep an eye on the stats from the World Gold Council to confirm that. So, what does this mean for gold prices? In my previous video, I talked about my gold price expectations and said that we may see gold prices of about $2,070. I was almost spot on, since gold prices hit $2,050 following a bull run sparked by the bank crisis. Now, gold prices have since dropped to about $1,980 on the 19th of April, likely because we saw US inflation dropping to 5% year on year. Can we expect higher gold prices though, or has the bull run come to an end? Personally, I think we can see higher gold prices in July, August and September, especially if the BRICS members agree on a new trade currency. In the short term though, I think that investors are not as worried about banks collapsing as they were a couple of months ago, so we may see gold prices ease a little bit. I don't think we will see gold prices fall below $1,880 since we have a decent support level there, along with the 100-day moving average, unless we see a massive drop in US inflation or sharp interest rate hikes. However, I don't think that's likely. Plus, we still have a possible recession on the horizon. Overall, I think we will see flat or slightly lower gold prices over the next few months, but we may see another bullish run later on in the year. If that happens, I think we may hit my best case scenario gold price of $2,150. To be honest, when I made that prediction, banks were still sound and functional. A lot of the recent developments with BRICS had not happened either. If we include those in the gold price analysis, I think we may see even higher prices, going up to $2,300, maybe even $2,400. This may be optimistic for gold prices, but I think there is a decent chance gold is going to hit these. What do you think? Are we going to see higher or lower gold prices this year? Let me know in the comments below. If you haven't seen my gold price prediction video for 2023, you can check it out here. Don't forget to leave a like if you enjoyed the video, and I will see you again in the next one.